Welcome to TradeTheNBI.com. This is John. This report is for the 12th. Hope everyone had a great Veterans Day holiday, supporting the troops and all they do. Of course, we've been riding this beautiful ABM yellow, now up to 3,071 here on the ES, S&P 500, and we're just maintaining it. I mean, we've had solid cyan below red line. I mean, we guess we were in a modest weak period here with the steel falling, but it's completely reset. Red well over 100%, but finally we're approaching that point where the azure down here on the shakeout reaches the gold, and at that point we can begin to see if we're going to get a new signal, which may be a DOC spread. Even if we get a DOC spread, it's going to be with a reset of steel, so may not be that much of a dip if there is one. So things are still looking good. I know the impeachment stuff starts today, but the market is indicating that they just don't think anything's going to happen with it. I mean, that's what the money is saying, because otherwise we would be plummeting if they thought that was a real effect. When it first started taking hold, was back over here when we had the dip. And once people realized there wasn't anything there, it was sort of like just boom, turn around. And of course, Brit exit, interesting news. Nigel Farage decided not to go after the Conservatives vis-a-vis run candidates for Brit exit against all of the Tories. So that means that there is a good likelihood that the Conservative government will remain, and actually potentially even a more strict version of an EU exit if they're successful. So that could put some more downward pressure on the euro, and you can see that here with the dip below the red line in extremes. Even with the reset, though, we're in a continuation mode, which is south, so that will put some pressure on the S&P. That's probably why we haven't broken into continued new highs. We should be all the way over 31 by now anyway, if things had been a little bit cleaner. Oil from its standpoint holding. So, this idea that, the economies are falling apart around the world, not indicated by what we're seeing from oil, because if that were the case, we would be in a doldrum. This is more an indication that things are going well, because the gold has been suffering within the sell signal. We've had a broad sell signal for quite some time. We haven't had a reset since back over here when we started the little push back up to try and recapture the highs, and haven't been able to. We've been making successively lower highs, and not surprising, dipping below the red line each time here, meaning that we're going to continue that press to the lows. For the Veterans Day holiday, we ended up ending that week with beginnings of a DOC spread, and literally right at the end of it was right there. We opened up and boom. It was interesting because we had talked about this from before. If I slide over, we had the 74 fill that I had marked, and we spent all that previous day bouncing around before finally filling it exactly. But when we filled it, we dipped below the red line and then took off, carried up to the new high. So once the sell signal came in, sure, we had these positive extremes, and then even to right about this level right in here, which was in the 79. But ultimately, we knew we needed to revisit that 74. And so sure enough, when we came through, the algo pretty much immediately just brought it right to that point before catching that bid here, and then boom, took off. And then kind of faded a little bit as we got it to this point here, but you could tell that was going to be a soft one here because it immediately reset with the steel, and then it turned around with the full dip and the crossover, and that took it to the highs, and pretty much that's what we've continued off of right here into the pre-market. Now have cyan under red, but all positive extremes, so this is likely to get filled back and forth. This is just to bring it back up to the pre-holiday close. No shock with that. So all in all, good stuff, and just continuing to go against the conventional wisdom, which has been that the market should have collapsed as of 3 years now. So as we continue. This is what we've talked about before, at least a few years back when I was mentioning why we were going to get to these levels, that post-war dividend. When you end up with these periods after a war, there's always this massive expansion in the markets, and the analysis has been done on that going back, from the late 1800s all the way through World War II, and that, so this wasn't anything unique. It's historical and it's happened before each and every time. So that's the long and the short of it for now. As always, though, I will keep putting charts up on the Skype chat, and any questions you can always just leave a message there, and I will certainly address it when we can. We'll talk later.